Vertex Pharmaceuticals, VRTX, Q4 2025 Earnings Call Summary Introduction. Good day, and welcome to the Vertex Pharmaceuticals Incorporated Fourth Quarter and Full Year 2025 Earnings Call. Today's call highlights a year of excellent progress across the business, marked by disciplined commercial execution, meaningful pipeline advancements, and robust financial performance. Key financial metrics. Q4 2025 total revenue, $3.2 billion, a 10% increase year-over-year. Full year 2025 total revenue, $12.0 billion, a 9% increase year-over-year. Full year 2025 Cystic Fibrosis, CF, revenue, grew 7% globally. US CF revenue increased 11%, driven by pediatric uptake and new therapies. International CF revenue grew 2%. KASJEVY revenue, $54 million in Q4 2025, and $116 million for the full year 2025. Gernavix revenue, $27 million in Q4 2025, and $60 million for the full year, with significant prescription growth. Q4 2025 gross margin, 85.7%, a reasonable proxy for 2026 expectations, reflecting product mix and manufacturing optimization. Q4 2025 non-GAAP net income, $1.3 billion, a 24% increase year-over-year, resulting in $5.30 earnings per share, EPS, up 26%. Full year 2025 non-GAAP net income, $4.7 billion, resulting in $18.40 EPS. Cash position. Vertex ended 2025 with $12.3 billion in cash, cash equivalents, and marketable securities. Management's forecasts for future quarters. 2026 outlook. Full year 2026 total company revenue, expected to be in the range of $12.95 billion to $13.10 billion, representing 8% to 9% growth year-over-year. Non-CF product contribution in 2026, expected to be $500 million or greater, driven by increased KASJEVY infusions and a ramp in Gernavix sales. Q1 2026 revenue growth, anticipated to be approximately 7% year-over-year, with acceleration expected in subsequent quarters. 2026 combined non-GAAP operating expenses, projected to be between $5.65 billion and $5.75 billion, reflecting continued investment in late-stage pipeline and commercial build-outs. 2026 non-GAAP effective tax rate, expected to be between 19.5% and 20.5%, due to the absence of one-time tax benefits seen in 2025. Significant risk factors. While not explicitly detailed as a separate section, risk factors are generally covered by forward-looking statements referencing risks and uncertainties discussed in detail in today's press release and in our filings with the Securities and Exchange Commission. These would typically include regulatory approvals, clinical trial success, market competition, and reimbursement challenges. Highlights. Strong 2025 performance, marked by excellent progress in CF and new product launches, meaningful pipeline advancements, and robust financial results. CF franchise strength, continued leadership with 5 approved CFTR modulators, extensive real-world data, and broad patient and geographic access. Successful new product launches, momentum behind KASJEVY for sickle cell disease and beta thalassemia, and the first year of launch for Gernavix in acute pain. Pipeline progress, significant advancements in the next-generation CFTR modulators, e.g., Elliptrex, VX-828, and the emerging renal franchise, povetacicept, inaxaplin. Povetacicept, POVI, potential, advancing rapidly with breakthrough therapy designation for IgA nephropathy, IgN, rolling BLA submission underway, and ongoing studies in membranous nephropathy and generalized myasthenia gravis. Inaxaplin for AMKD. Pivotal study enrollment completed, with interim analysis results anticipated in late 2026 or early 2027. KASJEVY reimbursement expansion. Significant progress in the U.S., CMS cell and gene therapy access model, and Europe, UK, Italy. Gernavix prescription growth. Strong adoption with over 550,000 prescriptions in 2025, and plans to double the field force to accelerate growth. Financial strength. Robust revenue growth, improving profitability, and a strong cash position enabling continued investment and shareholder returns. Share repurchases. Approximately $2 billion in share repurchases in 2025, demonstrating commitment to shareholder value. Lowlights. International CF revenue growth. Modest 2% growth, partially offset by the communicated $200 million decline in Russia sales for the year. Gernavix gross-to-net impact. Patient support program significantly impacted gross-to-net in 2025, though this impact is expected to diminish in 2026 and beyond. KASJEVY infusion variability. Anticipated quarter-to-quarter variability in KASJEVY infusions in 2026 due to the patient journey. Most important statements from the CEO and CFO. Dr. Reshma Kewalramani, CEO. 2025 was marked by excellent progress across the business, disciplined commercial execution in CF, and the new product launches, meaningful pipeline progress, and robust financial performance. Building on the momentum of our Q4 and full year 2025 results, in 2026, we are focused on increasing the number of patients we serve and further diversifying our revenue base. We are entering an exciting period, and Vertex is well positioned to deliver on the significant opportunities in front of us and drive sustained growth over the long term by combining commercial execution with serial innovation and rapidly advancing the pipeline across multiple serious disease areas. Regarding povetacicept, POVI, in IgAN, we see POVI's dual BAFF/APRIL inhibition as key to interdicting the underlying cause of IgA nephropathy and highlighting its once-monthly small-volume subcutaneous dose delivered via an autoinjector, a noteworthy consideration in the chronic biologics market, where ease of use has repeatedly been shown to influence product choice. On the emerging renal franchise, which is emerging as our fourth vertical alongside CF, hematological disorders, and pain, as a key engine for Vertex's next decade of growth. Charlie Wagner, Chief Operating Officer and Chief Financial Officer. I am pleased to share the details of Vertex's strong financial performance in the fourth quarter and for the full year 2025, which stands as a testament to our market leadership, the strength of our product portfolio, and our disciplined approach to investment and operational efficiency. Our increasingly diversified commercial portfolio, now spanning 4 disease areas, is driving new revenue streams and adding to our near and long-term growth profile. We expect full year 2026 total company revenue to be in the range of $12.95 billion to $13.1 billion, representing 8% to 9% growth versus the prior year. Regarding the 2026 outlook for non-CF products, this outlook anticipates continued solid performance from our CF franchise and a $500 million or greater revenue contribution from non-CF products, including greater volumes of patient infusions for KASJEVY and a ramp of Gernavix. In summary, 2025 was a year of very strong performance, continued execution on our commercial priorities and clinical programs, and further strengthening of our robust financial foundation. This concludes the summary of Vertex Pharmaceuticals Q4 2025 earnings call.